What's going on, guys? So great day to make a video. Let's talk about the markets. Where do I even begin? So triple Qs, predominantly the stocks that I'm trading, NASDAQ 100, 12 points on the day to the downside, 3%. This is pretty significant. Okay. You can see down here, I'm going to need my drawing tool for this video. You can see down here, my volume indicator, rising volume on a down day, never good. Okay. So what we want to be looking for here, we're going to get a bounce. Okay. It's inevitable that we're going to get a bounce. Even if the market corrects 15, 20, 25, 30%, it's not going to go straight like this. Okay. It's just not going to do that. That's not what the stock market does. So could we get a bounce tomorrow? Sure. Could we get a day two bounce? Sure. What we need to be looking for is if we do get this bounces up in the next 2 days, at least to end the week here, we need to see where do we stop, and also is this on lower volume? Okay, so if it's on lower volume, you can never really trust these type of bounces. So what generally happens is we get, started the selling yesterday, we get this massive flush. FOMC minutes from December came out today. They weren't good, to be honest. What was in the notes was not good. It does not look good for 2022. However, we have to always remain optimistic. Anything can change as a drop of a dime here. So the point that I'm trying to make is that if we get, let's say, some sort of dead cat bounce, I understand that the futures are down 100 right now. So what I am expecting is a gap down tomorrow. I'm expecting a gap down probably into this 380, 379, 381 range on the triple Qs. Completely fine. It's not really what I wanted. What I would have preferred, and I'll get to what I would have preferred in a minute, but let me talk about if we have some sort of, a little bit of a bounce day tomorrow, and perhaps even we get a bounce follow through on Friday. What generally starts to happen is people get very happy feet. They start to see a green day close. You get this big explosion move down here. Everyone thinks, aha, it's over. That was the end, the bottom is in, so forth and so forth. Everything's been priced in. Buy the dip, buy the dip, buy the dip. How many times have you heard to buy the dip? Tell the people that have been trading IWM and small caps in 2021 to keep buying the dip. Their dip is still dipping. So with that being said, what we have to look at is the volume lower, okay, if we do get some bounces. So let's say we get a bounce tomorrow and the volume bar looks like this. And let's say we get another bounce on Friday and the volume looks like this. This is declining volume. However, we had increased volume on the red days, declining volume on the green days. So what that's going to tell you is if we do get another spike in volume and we get a red day, not only could this come crashing down, but it could now break this level more to the downside. And then you kind of repeat that process again, low volume on a bounce, low volume on a bounce. And then you come back up to previous support. Now is rejection. And then you get another down move like this. And now we get started into a corrective territory, into a bigger overall market correction. But realistically, the big picture of things, triple Qs are probably down 5-6 points, 5-6% off of all-time highs of that 408 level that we kind of tagged. So in the broader scheme of things, it's not really significant as far as where we're at on the bigger picture, but there is a bit of divergence going on here with the fact that we have, the ETFs riding almost all-time highs while majority of the stocks are well below the 50-day moving average. So that is not really what you want to see. So here's what we got going on for tomorrow, guys. If we open where we sort of gap down, and we lose this level here, this level that I'm talking about being the 100 simple moving average. If we open up anywhere near 381, 380, 379 on a gap down, what we want to look for right off the bell is a little bit of a bounce, okay? That little bit of a breath. We could find potential short-term bottom. And when I mean short-term, I mean for tomorrow. We could find a short-term base somewhere in this area around the 100. and then start to get this little bit of bounce. Two areas that we're going to want to watch: today's lows, 383.95. In that area, do we get rejected there, or do we reclaim that? If we reclaim that, I can see us bouncing back up to this 387 area. We want to see what we do here in this 387. The problem is that a lot of people are going to see this bottom here. They're going to correlate this with the 100 simple moving average. They're going to say, hey, we found the support. That was the dip that we needed. We make this bounce back up here, get stuffed into supply, and then possibly start to roll over, chop around on Friday, and then come next week on Monday, we have another big downward spiral. So what I'm going to say, and I'm going to end this video kind of short because I got a lot of videos to make on a bunch of different stock charts, but what I am going to say here is it is trader season, meaning this is a cash flow market right now. Okay. We are in a perfect time for, if you're a day trader or a scalper, there's a ton of volatility to the long side. We are going to get aggressive bounces. We're going to get these aggressive flushes. So with that being said, is it's okay to push your chips on the table, find your setup, whether that be long or short, and let your play happen. Now, who's not enjoying this market or what's going on right now? Anyone who is invested into small caps, you guys are hating it. You guys have been hating it for a while now. Long-term investors who are holding big stocks like your Amazons of the world, your Teslas of the world, so forth, especially if you bought these stocks within the last 2 months, 3 months time here. Your swing traders, your short-term swing traders, not talking about, year, 2 year long swings, 6 month swings. I'm talking about people who are swinging, maybe potentially, options contracts 2 to 3 weeks at a time. You guys are buying, somewhere up here. And then now that we have this downward selling, you guys are really starting to feel the pain. So who's currently feeling pain right now? People who are holding longs. Now, am I saying to sell everything right now? No. Okay. If you believe in the company and you're a long-term investor, meaning you don't have any intentions in cashing out on this stock for the next 3 to 5 years, I wouldn't even look at what's going on a day-to-day basis in the market. This is completely irrelevant to you right now. If you plan on holding, not touching, not taking profits, not trading that particular position for 3 to 5 years, I would say look away. However, if you do plan on trading it at some point in time, you do plan on taking money out, you do plan on maybe trying to average down, you do plan on trying to buy the dip, you do try to plan on when you do get those spikes and you get that cash flow, sell and take some cash, you're not feeling the best right now. So what I'm trying to say is that this is a time not to be cash flow positive, meaning like have just cash lying around and, tell me that cash is a position, but you have the ability to trade both sides of the market. If we do go into any sort of corrective territory where we are going to correct on the overall market, it's okay to buy put options. It's okay to sell stock. It's okay to short stock. This doesn't mean that you hate the company. This doesn't mean that you want the company to go to zero. This doesn't mean that, oh, I'm a long-term investor in Apple. I can't buy puts on Apple. That's a bunch of bullshit. Where everyone's here to make money. You have to be able to capitalize on the market and the volatility that the market is giving you. So what I see going into tomorrow, because I know I'm kind of ranting and rambling on, what I see going into tomorrow, I potentially see us now with the futures. If the futures continue this slide overnight, I see the overall markets gapping down tomorrow. I see us finding a little bit of support, maybe 30 minutes to an hour after the market is open. And then what I plan on seeing is a little bit of a bounce. Okay. Now where we bump our heads is where I want to see potentially if we gap down. And do we bump our heads around this 384 and roll over, then using that low, that gap down low as your entry to short the position. Okay. That's what I see potentially happening. Or if we find some sort of support here at the 100-day moving average and we bounce up, reclaim the 384 and come all the way up to 387 and then start to stall out here, and you see us come back down, sort of back test at 383 area, chop around and then lose this level, I would be comfortable shorting here and using the 387 as your absolute stop on your short. So if it does decide to reverse and come back this way, you would be stopped out. Okay. However, if we continue to go down, now potentially we're going to have a bigger move, and I would feel confident in leaving that position on the table. Let's say futures come back overnight. Right now, they're currently down 105. Let's say the futures do come back in pre-market. We kind of level out a little bit. Maybe we're only down 20, 30, 40 points come market open. And let's say off the market open, we start to go green. Okay, this is what we want to see. We start to go green, and let's say we come up to this 387 area, 388, and then we start to chop around, and then we start to roll over. As soon as we lose today's lows, you can start looking at your favorite tech stocks and looking to short those stocks, okay, through today's lows. Here's what I will say. Take the stock that you like in the NASDAQ 100. Look at the low price of the day today. Draw a trend line under that low. Wait for the stock to bounce, meaning either open up green, gap up, maybe put in another low, then bounce. And then let's look for it to follow through back through the downside through today's lows. That's the area of opportunity to short. I am really not interested in taking any longs tomorrow. I don't care how good the long looks. Nothing's going to look good, because even if we bounce, right? Even if we do come down here and we bounce, today we lost 12 points, 3%. You telling me that we're going to get a 3% bounce tomorrow? It's entirely possible, maybe. But I'm just saying, even if we get a 3% bounce, even if the triple Qs was to recover this whole move from today and they go up 12 points, we're still under supply. We are still underneath the 50-day moving average. We are still underneath the 20-day moving average. We're still underneath the 5-day moving average. We're still underneath the linear regression. We're still underneath the 10-day moving average. What is the point that I'm trying to make here is that we are underneath so much supply. So are we going to get bounces? Yes. Can we take trades? Of course. Am I a bear? Am I saying short the market? Everything's going to zero? No. I play the bounces. I play longs. I play breakouts. I also do play to the downside. I'm just trying to let everyone know. I see a lot of stuff on social media. Buy the dip. It's time to buy the dip. Oh, bears are going to get wrecked. Oh, bulls are going to get wrecked. Guys, this is not about bulls versus bears, especially if you're a retail trader, guys. If you're a retail bear, you're not bringing any pain down on the retail bull. And just like if you're a retail bull, you're definitely not bringing any pain on a retail bear. Guys, relax. Everyone's here trading the same market the same way. You guys are all looking at the same charts. Okay. Stop having a bias of opinion and just play the charts. What the charts are telling us is that we are underneath supply. Today, we closed under the 50-day moving average. And we also lost this level on the linear regression channel. This is not good. This is not a good thing. On rising volume, guys, on rising volume, this is never a good thing. So yes, even if we do come down overnight and get this nice bounce tomorrow, yay, everyone's going to be happy. Now, can we make money going long tomorrow? Sure. Let's take pre-market highs. If the bounce is strong and we break through pre-market highs, let's scalp that. I want to be in scalpers mode. What that does not mean is we bounce, we go green. What I don't want to do is say, yeah, we're green today, and then continue to hold my position into Friday and then get slammed on Friday. Okay. No, if we bounce, we go green. It's perfectly fine to take that long play. Take those call options, buy some stock, but just know this is a scalper's environment. We have to take profits quick. If you get a move in your favor, long, take profits quick. If you get a move in your favor, short, continue to take profits quick until this market starts to weed itself out and see what is really going on here. Because realistically, if we do lose this low channel down here, going back to, let's see the date on this. This low wick that we have, 377.43, going back to the 20th of December. Guys, if we start to lose this, we are coming down to 373. And any close below 373 is coming back down to the 360s. And that would be a full market correction. I think we could start to look to add some positions, long positions, especially here and in here. Okay. I still would not add anything in here until we come down, bounce, back test, and then come back up. That's what it should look like if we want to go long. And then what we do is we just clearly use that 100 simple moving average as our line in the sand. Let me make this clear. if we are going to look to put on a swing play, or you're looking to start some investments because you want to buy this dip, what you need to happen is we need to come down and test the 100 simple moving average. I'm going to make this very simple. We need to come down and test the 100 simple moving average. Whether we break that or we test it just perfectly, whatever. We need to come down here. We need to test that. And then we need to come all the way back up. Okay. Then we need to back test that 100 simple moving average. And then we need to come up a little bit more. And then we need to reclaim the 50-day moving average, right? Break that. Okay. Come back and back test successfully. And then bounce. And then take out highs. And then crack through. Guys, that's what we need to do before we can really start to put on a swing place. Now, or the long-term investments, because if we're trading underneath the 50-day moving average, we're bearish, guys. Any pop is going to get slowly faded in the days coming. With that being said, now what about, hey, can we buy things here off this 100-day simple moving average? Sure. If we come down to the 100 simple moving average and you have a stock that you like that's also down around the 100 simple moving average or the 200 simple moving average, what you can do is you can wait for it to either crack through or tag it and then get a green close on a following day. Then what you really need is you do need the back test, okay? And then you need that to hold, and then you need to the market to show you that, hey, we are pushing up. That is a short-term support. Okay, if that happens, which is going to at least take another week's time, okay, 1 week from today, it's going to at least take 1, 2, 3, 4, 5 days, not even 1 day. It's going to take at least 1, 2, 3, at least 3 to 4, 5 more trading days before we can really, really say, hey, it's okay to buy off of this 100 simple moving average. Okay, we tested it, we back tested it, and now we're moving higher as a whole. It's okay to buy. And we're also just going to use that 100 simple moving average as a stop. Okay. This is for long-term investors. That's for swing traders. For all you day traders out there, for everybody who is not looking to have the stress, everyone who wants to go to sleep at night easy. I want to be able to go to sleep at night not having to watch the overnight futures. I want to be able to go to sleep at night not having to check the news or read what headline is coming out, or, you know, what's going on with FOMC, or, you know, is it going to sway the markets? I like closing my positions at the end of the day. I like knowing what is secured in profits is secured in profits, and anything I do lose, because as traders, we all lose. Anything I do lose, I know that loss is not going to be 10 times bigger when I wake up. I like that security. For me, that's security. Okay. For me personally, everyone's different. Your security could be parking money and leaving it there for 10, 20 years, coming back and knowing that it's grown exponentially. That could be security for you. My security is knowing that I can take capital. I can find specific setups according to how I like to trade in the stocks that I like to trade those stocks on a day-to-day basis, close those positions, and know that what I see in my portfolio on that P&L is my money, and that it's not going to go down any more than I lost on my own overnight due to some news, due to some virus, due to some whatever president we have, due to whatever is going on with, the Federal Reserve, due to, wages, due to inflation, due to CPI data, so forth and so forth. I know that I can trade the market, and I can trade long, and I can trade short. I don't have to worry about the market always going up. I don't have to worry about the market always going down. Okay. I can take a little bit of piece here, and then I can take that bounce here. And then if we chop around, I could sit out one day, and then I can take this flush here, and then I can catch the bounce here. Hope that makes sense, guys. Bigger picture right now, we are really not bullish until we get over this 408. Okay. We're really not even thinking about swing trading until we at least close over the 50-day moving average and successfully back test it. And right now, what we're thinking about is if we start to lose this 100 SMA, that next level we're coming to is going to be 373, guys. 373. As far as tomorrow's plays, Take a look at Apple through today's lows. Take a look at AMD short through today's lows. Take a look at Airbnb short through today's lows. Take a look at Amazon and short through today's lows. Take a look at Shopify and short through today's lows. Take a look at Google and short through today's lows. Guys, I can go on and on and on. I hope this video helps you a little bit. If you want more information like this, you want some, people to bounce ideas off of, or you're looking for a daily watch list of stocks that you can trade with current levels, pivots, and signals, join my Discord. That link is down in the description box below. Also, do me a favor, subscribe to my channel, throw me a like, leave me a comment. Let me know what you guys think. How are you guys doing out there in the markets? I hope everyone is staying safe. I hope if you guys are trading the markets, you guys made some killer gains on the short side today. I did play Amazon to the downside, AMD to the downside, as well as the triple Qs to the downside today. So not bad. I was content with what I did on those trades, but I will see you guys all tomorrow.